keeping an eye on oil prices. Talk about a problem. They're jumping again. Now, a lot of this certainly on, the supply concerns and demand building and all of that, and the fact that even with promises to boost production, it keeps happening. Alan Nuckman joins us right now, agro-financial market strategist. I was reminded, Alan, and looking forward to talk to you, of the Saudi oil minister who vowed to drill every last molecule. Well, no matter that, it hasn't stopped, all the concerns that might not be enough. What do you think?
Well, I'm almost purely a price guy. We'll talk about, his motivations. Obviously, he wants oil, but he wants high prices as well. So that's what a cartel tries to do, is try to balance it. But I think more importantly is that we're in a bull market, as we saw by what happened Monday, not just in stocks, but also in crude. It was a profit-taking pullback and a much-needed one. We saw crude drop from 75 down to 65. 65 was actually the breakout that we had back in March and May and June. So it held that level. A move back above 75 targets 85. So there's still more upside. And again, that's a positive barometer of economic growth.
Alan, one thing I love about having you is you'll look at the big picture, and my picture isn't nearly so expert-driven, but I just see supply and demand. There's a big demand. There's a big global recovery going on. Bumpy, I grant you, but we're coming from nothing, right? We're coming from park, and now all of a sudden we're doing 60, 70 miles an hour, and I see that as more what's driving this, and will likely continue driving this. But your thoughts?
All right, well, let's talk about how crude is a barometer of how the economies are doing globally, the macro market. So like you said, zero. We went from 150 in 2008 down to zero. So 75 is the midpoint, essentially, of the action that we've seen in crude oil over the last years. And if you look at the comparison to the stock market, there's a very, very high correlation. It did get disconnected a bit with 2020, but if you can ignore that, we traded between 40 and 80 for 5 years, so that targets 120 on the upside. So there's a lot of optimistic things happening. We've got low interest rates, obviously. Energy stocks really haven't participated in this rally as much. And the most important component that I want to focus on is that when the crude oil made those all-time record highs, the dollar was at 70, the dollar index. The dollar index is at 90 right now. It's had temporary firmness, but even in the face of that, crude oil's been strong. So I'm looking for this trend to continue, but like the stock market, you've got to be able to buy the dips and respect the overall trend.
So for gas prices, I notice as eye-popping as they've been, it hasn't affected people's vacation plans, travel plans. Right. They're still going out. They might be swallowing that, not liking it when they fill up the tank, but they're still filling up the tank. And I'm wondering how long you think that lasts.
Well, in reality, I know it's a pressure point, but people really don't stop driving because the price of gas goes up 50 cents. For most people, that adds an extra $20, $40 a month to their gas bill. So they'll make up for it otherwise. But let's look at, again, the stock market is up 45% in the last 2 years, and crude oil is up 35%. So you may not like paying higher gas prices. It's a sign of a booming bull market, and that helps everybody.
That's a very nice perspective. Alan, you leave me speechless. So great seeing you again, my friend. And I do appreciate the insight there. Alan Nuckman, the agro-financial market analyst. Oil prices are up. Gas prices are up. Natural gas prices. They've been kind of holding their own here, but they've been remarkably resilient through all of this as well. Again, a reflection